All right, everyone, welcome to tonight's webinar. It is September 5th, and I'm excited to talk to you about trade preparation this evening. This is really important stuff here. This is the type of stuff that can make a significant difference in your trading. These are things that you most likely have not considered before, most likely have not taken the time to really look into. But if we can help you make some changes here, can really help you with your accuracy in trading. And these are things that I do. I'm going to teach you a real simple acronym this evening that should be able to sit with you guys real simply that you can use moving forward. So let's go ahead and get started here. Before I get into specifically my nightly preparation as a trader and all of my trade prep, really, I just want to talk about what it really means to be a trader. I know this is going to be a little bit cliche, and some of you have probably heard my spiel before, but we are day traders, and I call this chat room KAF investing. Now, I don't call it KAF trading, I call it KAF investing, and I call it that for a reason. Because anyone can be a trader by simply buying and selling a commodity, right? If you think about it, a trader is just someone who buys and sells things, currency, stocks, or you're changing goods with someone else. That's all it requires to be a trader. Anyone can buy and sell a stock, call themselves a trader. But there's something that's going to separate the regular trader from an actual professional and successful trader, and that's where the investment comes in. Now, I don't mean investment in terms of capital or money. I mean investment in terms of your time. Right now, you're here, watching this video, listening to this webinar. You're investing your time into being a successful trader. Okay, and that's where the KF investment comes. People kind of give me grief sometimes. Why are you KF investing? You're a day trader. You don't invest in stocks. Well, that's not true. We are constantly investing our time into the markets, into these charts, and the result of that is what allows us to be a successful trader. So if you think about it, throughout our day, we're really only trading for a couple seconds every day. We might make 5, 6, 7 trades in a day, but I mean, how long does it take you to buy and sell a stock? That's easy. Buy, execute the trade, sell a stock. It literally takes seconds. What's hard is creating your trade plan, is finding your setups, watching the stocks. What are the markets doing? You're investing hours and hours of time into making these trades. Okay. So once you make the trade, it's really kind of thoughtless. The actual trading itself is thoughtless because you've already done all the work. You've already set up your brackets, your take profit, your price target, etc. Trading itself is really easy. Anyone can do it, like I said. But what's going to make your trades different is the investment that goes in beforehand, the trade plan, etc. Now, another reason why I think this is important is that newer traders tend to have a serious issue with over trading. Over trading is always going to be a negative and bad thing for you. And if it doesn't burn you the first day, it'll burn you the second or third or fourth day. I promise you. So that's another thing is think about just because you may not make a trade all day, and that doesn't mean you're a bad trader, right? You can be a successful trader by not trading, which is weird. But if you think about it, and you're investing your time into the markets, into these charts, watching for good setups. If you don't get any good setups, you don't take any trades. That's actually a great day for you. If you were safe and conservative and didn't trade anything unless it was A plus, and then there was no A plus setups, that's a great day for you. There's nothing to be upset about that. Now, of course, mentally and psychologically, we as traders, we mix that up all the time because in our lives, everything we do is the more you do it, the more you'll get. If you want to be fit, the more you go to the gym, the more fit you'll be. And that's not how actual trading works. A lot of times, the less you trade, the better your returns will be. Now, in terms of your investment that's going into preparing for trades, that is true. The more you invest your time into these charts, into watching the markets, absorbing what's happening, news, etc., in that case, that will have a positive effect on the result of your trades. So another thing is this also helps with chasing. If you think about it this way, if you don't know what you're buying, why you're buying it, then you shouldn't be making the trade. So many people just bounce around back and forth. Something moves, they buy. Something drops, they sell. And they don't even know what they're doing, what they're buying. And I promise you, if you trade like that, if you're bouncing around like a ping pong ball, I promise you, you will not be a successful trader. So please consider the investment that goes into each trade that you're making. And I'm going to talk a little bit. How do we make that investment? Okay. So like I said earlier, trading is just the vehicle of what we do. It's easy. Buy, sell. Easy. It's really quite thoughtless because we've already made the plan. What's hard is our preparation. What's hard is the investment of our time into preparing for these trades. Okay, so I've got the cliche stuff out of the way, but hopefully that helps you change your mindset a little bit. Let's go ahead and move into some of this preparation stuff. So the first thing you want to do, first thing you need to be doing every day is you need, at the end of the market, you need to ask yourself, how did the day go? You need to be recapping your trades. If you did not analyze your trades, you absolutely should not, it makes no sense at all to be trading the following day if you didn't look and see what you did today, what worked, what didn't work. Okay, so that's the number one priority. And this is why we provide a trade tracker. And soon we're actually going to be upgrading it where it's part of our website. So if you're a member, you will have access to that and it will automatically upload all your trades and it's going to be awesome. But as of now, we just have an Excel trade tracker that we send out to everyone. And I strongly encourage you to be using that. If you're not using that trade tracker, putting in your trades, calculating your wins and losses, you've already lost. Okay, you're not prepared for the next day. So please do that. Please analyze your trades on a daily basis because you will learn so much through that process. So now I want to share with you guys a little bit of a corny acronym. Okay, the acronym is SPA, S-P-A, should be easy to remember. And if you really want to get cheesy and corny with it, think about going to the spa after the market closes or going to the spa before you make a trade, okay? Because this is what you need to be doing in order to prepare. Now, at first, as I go through this, it might not make a little sense and it might be a little bit tricky to connect the dots, but after we go through an example with it, it should be very clear to you about why this is so important that you walk through these things, okay? Again, it's SPA. I know it's kind of corny and cheesy. It's my own thing. I made it up myself, and it's huge. It's made all the difference in my trading. So what does the S stand for in SPA? Well, the S stands for sector. Now, what does that mean? Okay, well, sector, we need to be asking ourselves what sectors of the stock market are moving properly. What sectors are hot? What sectors are bullish? What sectors are bearish? All right. Now, in the last couple of years, the tech sector has just been dominating the market. So, quite truthfully, at the end of each day, probably for 85 to 90% of your days in the last couple of years of trading, you could probably say the tech sector. Tech, everything is hot. But let's be a little bit more specific about that. What is hot within the tech sector? Is it social media plays? Is it, these INTC, AMD plays that, make these chips and things like that? What is it about that sector specifically that is driving it? Okay, now why is this important? It's important because there's a thing called a sympathy play within the stock market that is it's huge. It's a massive thing to understand because the way a sympathy play works is that if one stock in a sector is moving, it likely will bring up the other stocks in the same sector. And so knowing what sector is moving is going to help us find good sympathy plays. Now you'll see here I mentioned the heat chart, and I'm going to bring that up in a second here. But the first thing we have to ask ourselves is sector. What sector is moving? Is it oil plays? Is it Bitcoin blockchain craziness like it was a couple months ago? Is it marijuana stocks like it has been the last 2 weeks? Marijuana stocks are going insane. There's only 3 of them, Cron, TLRY, and CGC, but they've been going absolutely nuts, and we have to know that, okay? If we don't know what sectors are working well, we could get ourselves in a really bad position. We may find an A-plus setup on a stock, but that could be the only green stock in the entire sector. So that stock most likely will not get good follow through, even though it looks good, it's about to break out. Well, it's being weighed down by the rest of the sector. And so what we think is a good setup may not actually be a great setup, and our chances of getting follow through on it will decrease because the rest of the sector could be poor. So the first thing is sector. Next up, what does the P stand for? Patterns, okay? Now, a lot of people can sometimes complicate this more than it needs to be. I think people love to make things more complicated, and I actually think it's the industry's fault because I think there are certain individuals out there who try to make things look more complicated in order to kind of maybe sell books or sell this or sell that. Oh, you want to know this secret pattern? I'll tell you if you come join me. Okay, that's not how it works. I'm just gonna tell you right now, that's not how it works. The more simple you keep these patterns, the better off you will be. Okay, now what I'm referring to is technical patterns. Okay, bull flag breakouts, dip buys, ascending wedge, ascending triangle, all sorts of those things. I don't want you to get too caught up in that because we talk about those constantly within our chat room things. And honestly, you can Google basic stock patterns and see a very basic generic list of the types of patterns that you need to be looking out for. It's not a secret, okay? But it's important to know what patterns are currently working, okay? And now this kind of can be a little bit of a secret. Okay? Oh, I jumped ahead. Sorry, I'm going back. This can be a little bit of a secret, and what I mean by is you have to be aware, you have to be investing your time into the charts, into the markets each day where you know what patterns are working well and what patterns are not. There will be times in the stock market where bull flag breakouts will not work at all for weeks at a time. For whatever reason, the markets just aren't following through. Stocks are not following through on a bull flag breakout. There will be other moments when bull flag breakouts are like guaranteed automatic, and you want to make sure you're playing those every time. That's all you want to be looking for. Right? There are other times where dip buys right out of the gate within the first 5 minutes of market open after an earnings win are automatic. There are other times when if you ever see a wedge, you want to make sure you play it. There are other times if you ever see a wedge, you want to make sure you don't play it. Okay, it's constantly changing, but you need to ask yourself what patterns are working. And I'm going to walk through an example of how I personally would recap right now for tomorrow, and this will make a little bit more sense to you guys. Now, what does the A stand for? The A here stands for aggression. Okay, I talk a lot, so much about trading is risk management. Risk management is really the number one thing that I try to help newer traders understand, because it will save them so much money, so much time if they can understand proper risk management. Now, I do have a YouTube video about risk management, which does a really good job explaining what I mean by this. But to kind of break it down simply, you need to ask yourself, how aggressive was I trading today? Was I too aggressive? Was my sizing too much? Did I use too much capital? Or was I not aggressive enough? Maybe I let tons of plays pass by me because I was just, being too shy. I couldn't pull the trigger because who knows why, who knows what affects our mindset and things, but you need to ask yourself and analyze where you were. Was I aggressive enough? Was I too aggressive? Was I just right? Okay. Now there's a separate type of aggression that we need to ask ourselves about in addition to just sizing, how many shares did we buy? How much capital are we using, etc. And I call that, and I'm going to refer to this as the entry. There are certain entries are more aggressive than other entries. For example, if you're waiting for a stock to break over a certain level to buy in, I call that a clean breakout level. That's an aggressive entry into the stock. There are less aggressive entries into stocks like pop and drops, half pop, half drops. And if you're not quite sure what that is, I do have some videos on that, or just go ahead and message me and we can talk more about that. But the point is that there's different levels of aggression to everything in trading. We can also be super aggressive with price targets. Today I didn't give stocks enough room to run. I sold way too early today. Tomorrow I need to be much more aggressive. Okay, so ask yourself your aggression levels. All right. Now, I mentioned before when I was talking about the sector, I wanted to show you guys a heat chart. This is an example of a heat chart. This is within ThinkOrSwim. Strongly encourage you guys to be looking at this. This does a really good job at helping you see what sectors are running well. Okay, so if we go back again to my chart here, remember the S, it stands for sector. We want to know what sectors are running well. Well, if we look at this heat chart here, it will give us some really good insights. So from this example here in the top left of the screen, you can see that financials had a great day on this day. Okay, if you also look down kind of in the middle at the bottom, you can see that IT, this is tech. Again, tech had a really good day today. So we want to be also healthcare had a good day in this example. And so we want to be looking for plays within these sectors because we know those sectors in general are bullish. And you can also look at some bearish. In this case, consumer discretionary stocks, materials, consumer staples, utilities, those things were really quite negative. Okay, so we would want to avoid, playing a Macy's or a Walmart or a Home Depot or something like that. Okay, so please utilize the heat chart because that's going to give you a lot of insight to the S of this equation, the sector. What sectors are moving well? What sympathy plays can we look for? Okay, now I'm going to talk about something called catalyst here in just a second. Actually, let's go ahead and let's jump into that right now. So what I'm going to do now is I'm going to give you guys an example of how I am currently preparing for tomorrow's markets. Okay, so first let's go ahead and talk about patterns. I know I'm starting out of order, doesn't really matter, but the idea is let's talk about patterns. Okay, right now the only patterns that are working in the stock market are patterns that are tied directly to a strong catalyst. Okay, a lot of times you'll get certain stocks that are forming a bull flag. There's no catalyst, there's no fresh news, there's no earnings win, there's nothing really. It's just a stock kind of being a stock. And if it's forming a bull flag or some sort of breakout pattern, it might get really good follow through, even though there's no catalyst. Well, in recent market conditions, the last couple of weeks, it doesn't matter how good the technical setup. If there's not a good catalyst attached to it, it has not been getting good follow through. So right now with their patterns, the first thing I'm looking for tomorrow, I need to make sure, and I want to make sure that every single technical setup I trade, whether it's bull flag breakout, a dip buy, a wedge breakout, an ABCD pattern, it has to be attached to a catalyst. Now, what do I mean by that? What is a catalyst? Well, a catalyst is something that moves a stock. It can be news. Well, it's basically always news. It can be an SEC filing. It can be an earnings win. It can be a press release that someone put marijuana in one of their sodas once and it tasted good, or we actually saw that sort of press release today from NBEF basically, and it caused a huge spike in the stock because that's the catalyst that's really hot right now. Okay, and this kind of ties into sector. The marijuana sector is really hot right now, so These all kind of do intertwine with each other. But right now, in terms of patterns, basically, I'm not even worried about specific technical patterns. I'm more concerned about each pattern being tied to a strong catalyst. And right now, strong catalysts are earnings winners and marijuana plays. Okay. Now, what are some patterns that are not really working right now? We already talked about this. There are certain times where a low float stock will just be forming, a technical pattern, and traders will go crazy over it. There's no reason the stock will run 200-300% in the day because of it. It doesn't make any sense, right? Well, that's not the case right now in our markets. Low float parabolic runners, it's not happening right now. Okay, so we're avoiding those and we're leaning more towards stocks that have a strong catalyst. All right, so I've done the P, my acronym SPA. I've completed the P. I know what patterns are working. I know what patterns are not working. I'm ready to move on. So let's go ahead and talk about sector. Well, what sector is moving today? Today it was financials and energy. What sector did not move today? Tech. Tech got absolutely destroyed. The NASDAQ finished down over 1%. Netflix finished down like 6%. Amazon, Baba, everything was red in the tech sector. Literally everything was red in the tech sector. Okay, so we know moving forward we need to be careful with the tech sector. Now, having said that, because today was such a violent sell-off in the tech sector, it is very possible that we get a violent bounce to the upside in the next couple of days. So we want to keep that in mind. But just as a general rule, we want to be aware that tech really struggled today, and if it shows continued weakness tomorrow, we may get some opportunities to short if we wanted to be aggressive to short some of the setups. Okay. Now, next up. Aggression. Let's talk about aggression. So today I was extremely conservative. I made 2 trades today for break even. Extremely conservative because the markets were just getting thrashed and I didn't like what I was seeing. That's all there is to it. So I was very conservative. I was not aggressive at all. Okay. Now tomorrow, what does that mean for tomorrow? Well, this decision is going to kind of be influenced by what futures are doing, what market futures are doing. But I'll just tell you right now, I'm not leaning towards being super aggressive tomorrow. I'll be more willing to be more aggressive than I was today because basically didn't trade today. I literally watched screens for like 8 straight hours, just absorbing all the information that I was seeing, taking in what catalysts were moving, what stocks were moving, why did that do that, what's the connection between. I basically studied the markets for 8 hours today and didn't make a single trade. Okay, so now looking for tomorrow, now that I've absorbed a lot of this information, I have a good grasp on certain political news, what's happening with Trump, and there's this op-ed piece and all of these sorts of things I feel like I have a really good grasp about. So moving tomorrow, I'm going to be a little bit more aggressive. I intend to make more than 2 trades tomorrow. Okay, so this is an example of how to run through the SPA, the SPA acronym for preparation. Now, in terms of entries, what entries will I be taking? How aggressive will I be with my entries? I'll be relatively aggressive because clean breakouts have been falling through really well recently. Pop and drops, I haven't done a pop and drop in probably a week or 2. Okay, it's just how it is. There are other times where I will only pop and drop stocks and I won't take a clean breakout for months at a time. You just never know. You have to ask yourself what's working well in the markets. Okay. So as I mentioned, my decisions tomorrow will be based very strongly on what I'm seeing in the futures. Okay. So let's talk about futures for a second. What are futures? How do they work? Why do we care about futures? I'm sure you've heard of futures traders. There are people who will only trade futures. So rather than trading specific equities or stocks and things like that, they will just trade the futures. So the way this works is futures represent the anticipated movement from the stock market. All right. So for example, right now, as we speak, the Dow Jones Industrial Average futures are down 0.03%. This means that if the stock market opened up right now, the Dow Jones Industrial Average market would be down 0.03%. So it's basically a direct reflection. Okay. Now, the regular stock market closes, 4 p.m. Eastern time, and then after hours trading ends at 8 p.m. Eastern time. But futures trade nonstop. Futures trade through the middle of the night. Okay, so if there's some crazy news about, something with China or Russia or who knows what, a world disaster or something, those will affect the futures in the middle of the night, and it'll affect what the stock market's going to open like tomorrow. So if you don't know what futures are doing and you're about to hop, you're waking up in the morning, going to sit at your computer to trade for the day. If you don't know what futures are doing and you don't know what the overall market sentiment is it bearish, is it bullish? Then again, you're totally not prepared to trade. You need to make sure you're investing. This is where that word investing comes, not capital, but time. Investing into what are the markets doing? Why are they doing it? What news is out there? What political news? Trump said what? He tweeted what? Nike just released this ad campaign. These are the types of things we have to invest our time in. Now, within the chat room, we kind of do that for you. You know, I go on the voice channel and I talk about critical news every morning and the future is what they're doing, why they're doing it, and what I think that means for us. So, you know, obviously having the tools, having a chat room, you know, that's a big part of it. We provide that for you. But even, you know, beyond that, still take the initiative to prepare yourself as well. Okay. Now, one last thing I kind of want to talk about here about the recap, and I want to talk about discipline and some rules here. Okay, so there are certain times. Oh, this is actually a great example. So I have not traded a marijuana stock for the last 5 days, and in that last 5 days, the marijuana stocks have made massive runs. Okay, so you're probably looking at me and saying, "You're so silly. Why have you passed on these opportunities?" And there absolutely have been opportunities. There's been A+ setups left and right on these things. I have passed on all of them. Now, why, you might ask? It's because at the end of the day, a couple days ago, I had a trade on TLRY or CRON. You know what? I can't even remember what it was. But I got too greedy. I got way too greedy thinking that these stocks were going to do a certain thing, and I broke some of my rules. So I right there had to sit down and tell myself, Calf, you are not trading another marijuana stock for at least 2 weeks. I made a sticky note. I put it on my computer, said no marijuana stocks. Okay. Now, it's just how it works. We have to discipline ourselves. We have to self-govern ourselves, because I knew that mentally I was not in a good state to trade these marijuana stocks because I got way too greedy on them. Now, luckily, I'm up on them and I've traded them well. I finished kind of on a bad note. Now, in a couple days, I'll reanalyze myself and I'll ask myself, am I ready to, be open to this again? And perhaps I will. So I encourage you to do the same thing. Did you break any rules today that you felt silly about, that you shouldn't have broken? Did you just do something that was a total boneheaded move that you should never do? Well, if that's the case, set some parameters, set some things up to make sure you don't do that again. Make some rules for yourself, self-implement those rules. Write on a sticky note, stick it on your computer. Protect yourself and protect your capital, please. And the way we do that is by self-governing. We work for ourselves. We don't have a boss. We totally work for ourselves as day traders. And that means that we have the freedom to do whatever we want. If we want to break rules, we can. Right? If we want to go out on the lake and boat for the day, we can. Okay, you can do whatever the heck you want, but that can be a negative if you are consistently breaking your rules, if you're consistently making exceptions for things that you shouldn't be making for. So please hold yourself accountable. And if you need also help, message me. I'll talk to you about it. I'll help hold you accountable. I'll check in with you a couple times a day. Make sure you're not breaking the rules. Okay, now last thing here is adjusting your full size. If please watch my risk management video if you haven't already. This will make way more sense. If you don't know what a full size is, this won't make sense. But I'll just say right now, June 1st through September 1st, I always decrease my full size because the markets are slower during those couple months. Okay, so maybe say perhaps I usually trade $15,000 of capital per trade. Well, during June 1st to September 1st, I'm probably only going to trade $8,000 to $9,000 worth of capital per trade. But perhaps in January, the markets are just on fire. I may trade $20,000 as my full size per trade. Okay. So this is another thing you kind of have to adjust, but don't get too crazy with this. You don't want to trade this throughout the day. You don't want to trade this after every market end. This is something that kind of at the end of the week, you want to ask yourself, should I increase my full size or should I decrease my full size? If I didn't trade well, if I had a red week, automatically you should be decreasing your full size. If you traded really well, you feel like you're in the zone, you're at a really good spot, you're keeping your rules, you're disciplined, you're not, you're staying within your comfort zone, then maybe you want to increase your full size and be a little bit more aggressive. So, okay, so that kind of sums that up. This stuff, I promise, will make such a big difference in your trading if you do take the time to go through this acronym. So please